Good afternoon, everyone. David Paul speaking. I want, in this short video, to have a look at the predictive power of volume. Now, I'm going to talk about a South African share, and the share in question doesn't really matter. The principle is what I'm trying to get across, and it will apply equally to a UK share as it will a South African share. The share in question is a small IT company called Pinnacle. It's a share that I know very well. So there is the candle chart of Pinnacle. The line is an 89-day moving average. I put it in all of my charts. As you can see, vectorvest gave a sell signal on Pinnacle somewhere around here. And that sell signal, apart from a brief period on hold, is still in force. However, what's really interesting is the volume pictures, guys. Because the volume on this particular scale hasn't done much, but the share broke on slightly rising volume, and then it rose on falling volume, quite difficult to see. Then all of a sudden the share price fell, and fell hard, from about 22 down to 20, but in this case this was accompanied by a massive increase in volume. Now, what's really interesting is that the share then tried to get up for about 4 days. And as it rose for those 4 days, the volume dried up completely. Now, if you see a share that's falling on rising volume and rising on falling volume, that's really, really bearish, and it's pretty much 100% certainty that we're going to see a further fall. In fact, that happened, the share fell from 20 to 12 during that move. Now, in the next little period, just in here, it tried its best to get back up the page, and it rallied from 12 to 15. In that period, the volume, in fact, fell, and that was saying that there's more downside, and that's exactly what happened. Maybe I can see it better on the 6-month chart. So we have this period where the price fell and the volume rose. In this little area, the volume dried up, and as you can see, this support became resistance and it fell through the floor. And then all of a sudden it rallied here on falling volume. That's saying there's more downside. And in the last few days, folks, it fell from 15 down to about 13. But as it fell, the volume contracted. And that's, in fact, the first bullish sign in this particular share, in that if prices are falling and volume is drying up, that's quite a bullish situation. In the last couple of days, the last day, in fact, price rose and the volume rose. And that's the most bullish thing that we've seen out of the share for a very long time. So if we have a situation where we're trading below the 89-period moving average, the vectorvest recommendations on a sell. If you see the price falling and the volume rising, and then the price rising and the volume falling, invariably you're going to see another sharp sell-off, and that's what happened here. That's what happened there. If you are short selling, folks, your timing needs to be better. And I think that if you understand the role of volume and some simple price action in sync with the 89 and in sync with the vectorvest sell recommendation, you'll be well on top of that. We have a situation now where the price is rising on rising volume, and on Friday we had an outside day, which in fact encapsulated the range of the last 3 days. And brave players may be in fact tempted to pick a bottom here. Okay, I would like to see that top rising, and certainly the best thing to do if you're conservative, wait for a vectorvest buy recommendation. Okay, so I think that volume's absolutely invaluable, and just remember, if prices are rising and volume's rising, and prices are falling and volume is falling, then the bulls are in control. If the prices are falling and the volume's rising, and the price rises and the volume falls, the bears are in control. This is David Paul. Thanks very much.